Look, if you asked me 3 years ago, I would have definitely said gold is the true inflation hedge, and Bitcoin has no business being called an inflation hedge. But recently, my opinion has been changing on this, and it's because we're starting to see true institutional adoption of Bitcoin. I mean, Larry Fink, CEO of BlackRock, he's come out in massive support of Bitcoin. I mean, they've done the ETFs, they've also done the Ethereum ETFs, and they're building a lot of infrastructure around Bitcoin. So, it's getting institutional validation now. And now there's over $164 billion of Bitcoin held, which is like over 7% of the supply of Bitcoin is held by Bitcoin treasury companies. It's absolutely mental.
Inflation hedge might mean a little bit more now than it did 3 years before that. We've seen a phase of inflation in the last few years. And yes, you have the CPI, but really, even beyond the CPI, certain goods, the thing that we care most about, food, energy, housing, has seen even more inflation. And so to your point about true inflation hedge, if you're looking at absolute returns, crypto has actually been able to generate you something substantial beyond just, if you had your money sitting there, not only did you defend yourself from inflation, you had, significant return. Gary, I want to give you a chance to respond.
If we look at, if we do a comparison again and look at the historical performance of gold often increases during high inflation periods. I mean, we saw that in the 1970s. We saw dollar falling short today because of the jobs that came out. Non-farm payroll jobs came out, terrible results. What happened? Dollar started falling, but what happened to gold? Gold started rallying. Now we're also seeing Bitcoin actually rallying today as well, off the news as well. So we've seen Bitcoin and gold rally, dollar falling. So we have an inverse dollar relationship. Gold tends to increase when the fiat currencies weaken.